Everyone, a very good morning, good afternoon, and good evening to all. Myself, Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will be continuing to work with the indicator normalized average true range. This is the second part involving this indicator, and in today's session, we will be completing the buy side of the equation. We will see how we can design and develop the algorithm using this indicator to profitably execute the buy trades on the Euro USD. So let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. The last time around, I had completed the setup so far, which includes the instrument subscription, where the Euro USD is being used as the default instrument, the instrument of our choice. Afterwards, the position amount was defined at 0 to make sure there is no existing pending or open position on the account prior to the execution of a new trade. The normalized average true range blocks have been added with the candle period of 1 hour each. The only difference between these two blocks is the look back period. Here it is 1 and in this case it is 2. To look at the price volatility, we are also taking the help of get historical candle. This is the hourly time frame, and these two to make the precise entry point are of 10 seconds each. And this calculation expression has been used to find the difference between the last hourly candle high and the candle low, which we will utilize to set the conditions for the execution of the trade. Now let us head to the JForex platform, where I will give you a refresher of sort of what the logic is for the execution of the trade. The logic is fairly simple, as I had also explained in the last session. We will be looking to initiate the buy trade when we see that the NATR value has jumped by at least more than 0.02 points. So we will be calculating the difference between the last hourly candles NATR and the penultimate hourly candles NATR, and we will deduct the penultimate hourly candles NATR from the last hourly candle value, and that will be the value which we will then compare with the fixed value of 0.02, and it should be more than that, and only in that case the algorithm will proceed to look for other conditions which will need to be satisfied prior to the execution of a buy trade. We are also taking into consideration the volatility, and for that we want to make sure that there is enough of buying momentum, and to make sure we will be looking at the difference of the closing value and the opening value, and that should be more than half of the difference between the candle high and the candle low of the last hourly candle. Okay, so these two conditions needs to be satisfied. We are not going into the exact value of this hourly candle close. We are relying on the NATR, and that will ensure that the jump is good enough in terms of recent price volatility. So now we head back to the Visual JForex platform, and we will need to carry out a couple of calculations, starting with the finding of difference between these two NATR values. So let me now bring in a mathematical component. I will deduct the line 14 output value from line 10 output value. So as per Excel convention, all we have to do is type in A1 minus A2, and whatever is the difference, we will then compare it. All right. Now we also have to find out the difference between the closing and opening values of the candle 15. So I bring in one more calculation expression block. Here the closing value and the opening value will be taken into consideration. So again, same thing, A1 minus A2. Now that we have these values calculated, we can start with adding the conditions for the execution of the trade. So for that, logical components will be needed. I will bring in the multiple action. For the time being, I will join it to the this calculation expression block, but later on, as the need arises, we will have to disconnect it and add a few more blocks. So we'll do it whenever required. Okay, now we need if else statements. An ATR difference needs to be more than 0.02. This is normalized average true range. That means we are looking at the average true difference of more than 2 percentage point. Okay, and here first input greater than second input. Then we need the candle 15 candle close to have been more than candle 15 candle open. So I will have to take auto created variable. Here also first input greater than second input. Then we look at the difference of the high and the low, and I think one more calculation expression block is needed straight away to multiply this actual difference by 0.5, or you can divide it by 2. Anyways, it will work. I will create a new variable with the start value of 2, dividing factor. As I had said earlier, now again we have to break the flow and connect it to this next calculation expression block. Okay, it will be A1 divided by A2, where I add half of the difference. The difference between the closing and the opening value needs to be more than half of the difference of high and low. So I will have to compare the output value CCV with this output value HDV. We have now conditions involving the NATR and then the price volatility of last hourly candle. So I think we are good to add the last two conditions prior to the execution of the trade. That is to define the price point at which the execution of the trade will happen. So I bring in two more logical blocks if else. Alright, we need the closing value of last hourly candle, which is candle 15. And after that, we also need the candle 16 and candle 17 closing value. So I will compare. Alright, so we have these two conditions in place now. First input in this case will need to be greater than second input. Here also the same condition needs to be defined, first input greater than second input. Now all we need is to bring in the trade command block. And for that, we will take the trading component. Now there are two ways to define it. You can go for a market open or you can go for a pending order. And I think we should go with the pending open. And for that, we will have to do some additional work. This is to ensure that we don't really get a buying after there has been substantial up move already. So it will be a limit order. In this case, first input less than second input. Now we have to define these input values at which price the execution should take place, then the slippage, stop loss, take profit, and the order validity. So I think we have to look at the chart to get an idea of what kind of setup might work. And I was thinking that if we simply take half of the difference between these high and the lowest point, that should work fine. So that will be our execution point. This is the point at which the order will be placed as the closing value was higher compared to the difference of these high and low. The limit order will work good for us and it will remain valid for 1 hour. So all we have to do is deduct this difference from the candle 15 candle high and we arrive at our opening price point. So again, calculation expression is required. Candle 15 candle high and this output value. So this will be again A1 minus A2, and this will be the entry point. So I'm naming it VE by execution. Alright, we have a price point for the entry. Now, trade amount, I think it should be defined keeping the equity in the account in mind. Here I am defining at 0.1 million. Slippage for Euro USD 2 pips is good enough. Stop loss, take profit, there are multiple ways to go about it. And for this session, we will work with the default stop loss and take profit. So it will remain with the risk reward ratio of 1:2. 25 pips and 50 pips should work fine for the Euro USD. We are not making any changes. And this variable needs to be defined, but we will do it in the next session. The validity of 1 hour is likely to work fine given the fact that we are working with the hourly time frame. So that's it from my side for this session. I hope you have been able to understand the logical as well as the execution part of this setup so far. If you have any query or any idea to share, you can write back to me in the feedback section. For further coverage on the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can join us there. For carrying out the testing on the historical data, you will need the help of the JForex platform. All of these links have been provided. Thank you all for joining in. See you next time around. Till then, goodbye.